Push, push. Okay, what's going on, guys? In the middle of watching this trade push. Hopefully, it makes it to my target. Okay, what's going on? It is 1 p.m. New York time, and yeah, this is kind of a last-minute scheduled stream. Decided to do this yesterday. We're gonna keep this relatively short. As you can tell right now, I am currently in a trade. I'm in a long. This is for the Phemex trading competition. So for those of you that have been following along, you know that there is a competition that started about a day ago, going on probably about 2 days now. I'm in the competition. I am trading under the BlockRoots team. I made a mistake early on. I deposited accidentally too much Bitcoin into the competition account. Is this going to move against me, or is this going to actually move favorably? I deposited too much capital into the trading competition account, and let's set a stop real quick so I can just do this without thinking. All right, definitely don't want to be back below that low, so we'll just let this ride. So anyway, back to what I was saying. What's going on, guys? So I deposited too much BTC into the competition account, and you know you're supposed to deposit 0.02, and I deposited like I think I deposited 0.2 or 0.28. Don't know how the hell it happened, but either way, I deposited too much, which means that since the competition really favors being a degenerate and using high leverage, when I'm using 7 to 10 times leverage to increase my exposure, ultimately I am dealing with more slippage than a lot of the other trading competitors. You know, it would have been nice to use that amount of leverage and to have that amount of growth with really having a reduced amount of market impact. So right now, as it stands, I am, let's see, I am up, well, it says 13.73, but I'm actually up 20%. This doesn't catch up right away. So my entry equity was 0.28 and the current equity is 0.36. So I'm up about 21 or 20%. Rank 91 out of 2,377 participants. This is not that impressive, honestly. I haven't caught any wicks yet. I haven't done anything really tremendous. Last night I slept on a long, which was good because I woke up with about $700 profit from that. But again, we're trading against people that are using ridiculous approaches that are frequently probably competing, are probably competing a lot, using high leverage and throwing the book at the market. So if you don't really swing for the fences, there's really no chance that that you're going to walk away on the leaderboard, or that you're going to take a dominant spot on the leaderboard. This is suddenly looking now like it might offer a short-term short opportunity. So I don't want to focus on this too much during the stream, but I do want to make sure that we put ourselves in the best possible position on the BlockRoots team. I'm in 60. I might just cut this real quick. Let's see if this provides a floor. Hold on one second. I mean, I still have this base to work off of. That's what I was looking at. The original pocket of shorts are captured down there. But I don't know. We're going to let this ride. We have our stops in place. Either way, we're looking good. So, what's going on, guys? Ecomienda, Cornholio, Jimmy Trendix. What's up, Keld? What's up, Sweet Canary? Crypto DJ, Crypto Cord, Freddie V. Yeah, so 0.02 was the minimum, and I accidentally deposited 10 times that. So I have to, what I was saying was, if you're using 0.02 as a starting balance and you're applying 10 times leverage, you're still trading with less than a BTC, right? Where I have 0.28, I think was my starting, as we just saw, 0.28, which means that if I'm going to be trying to really increase the return on investment, or the ROI, then I have to use anywhere from 5 to 10 times leverage, which puts me at position sizes that are anywhere from as you can see right here, 30,000 contracts to anywhere from, I'd say, I think, went up to 50,000 contracts. So the problem with that is, you have market impact at that point. This might not be on every exchange, but there is some slippage that is noticeable, and of course that's going to eat into your bottom line. It's just a transaction cost. Okay, so we'll leave this. get into where we currently sit right now. I have done a whole lot of flip-flopping this morning. And again, this is all the stuff that you're seeing me post as of the last 24 hours. Most of that has to do with my positioning in the competition. So, don't be mistaken and think that, I am suddenly, when I'm talking about a short opportunity, that I am bearish. This is outside of what I think for the higher time frame structure, and it's outside of what has been my prevailing opinion now for the last few months. So where we sit right now, it's not like there is anything that we have ahead of us besides this all-time high, right in 2019's all-time high. Aside from that, I shared a tweet this morning, and I said what I'm applying is uncertainty theory, because that's really what I have right now. I have a level of uncertainty just because we're approaching an area where there's really no price memory. So if we just look at this structure on the higher time frame, I want to get this fucking volume off the chart. Excuse me. A little bit turned up because right now we're moving up, and I want this trade to work out favorably. So there's really no price memory up here. This was a blow off top. This is itself. There was not much that took place up there. This is on the weekly time frame, but even when we look at on the daily, again, we're just approaching an area where this was previously. Both of these locations that we're approaching right now were previously blow off tops, and there's really nothing that says right now that the market is potentially approaching the same point with regards to a blow off top, because previously we saw that derivatives were really overextended. And as you can see right here, just from looking at the Coinbase chart, it's trading at 13,640. We look at the BitMEX chart, it's trading at a $13, $14 discount. So that's telling you right there that spot has strength, okay, that Coinbase is leading. And it also could be an indication that on the derivatives platform, it is being bet more heavily against. So if we look at something like Trading Light, which is one of the reasons why I signed up to Trading Light, is because it has, it's visually, it's a nice platform. I don't really care about the heat maps, but what I care about is the open interest and the fact that I could sort of cycle between. Normally when I have my screen set up, now I have like a 50-inch screen. I have multiple charts set up, and I'll have my Coinbase, my BitMEX, my Binance futures, my Binance spot, my OKX, my OKX futures, and I'll be able to sort of look at all the relationships between these exchanges to see whether or not, again, we're in a period where spot is showing a sign of strength, or it is the derivatives that are leading the market, either to the upside or to the downside. Already can tell that I'm having a dry eyes issue. And I think what it is not only so my contacts, I took them out and everything is good with that, but I think what I'm not used to is I have these lights, right, for the studio effect. I have these lights that I never had before that are posted up behind the computer, and it's sort of like, you know what it reminds me of? I used to play summer softball with like an old man's league, and it was my dad's team. And I played in the outfield, and we played night games. It reminds me of looking up for the ball whenever the night lights were on. The night lights, the lights, right? The ball field lights. You lose the ball in the lights. So anyway, right now, what we saw, going back here, what I saw initially is the reason why I got short. So we'll look at this structure on TradingView first. Okay, so we gained acceptance over this high, so this 13,378 level. Okay, and that goes back to all the way back to here. Okay, where are we? Let's zoom out. Going all the way back. That is your daily close all the way back. Okay, so we're going back to, excuse me, where is that? That's the most recent high. Okay, so that is the most recent high. We gained acceptance over that high. All right, but it wasn't like the market was getting slippery away from that point. So I've talked about many times, when you get a breakout through a level, you get a big extension, you don't get that very meaningful pullback all the way down to the level. Instead, you get this really tight flag pattern that forms. And a lot of times I don't overthink these whatsoever. I'm just going to buy the breakout, or if I buy prematurely pre-breakout, I will just place a stop that is something like a 30-minute ATR below the low. I don't overthink these. They are there's no magic behind them. It's just a lower time frame continuation pattern, and more often than not, it resolves successfully. This was a breakthrough, a previous sort of point that everyone was focusing on, that high, okay, and there wasn't an immediate follow through, and the flag was not really doing anything that was drifting up. It was showing more signs that it was drifting downward. Now, that alone is not really any reason to necessarily get overly aggressive on one side or the other, so I did get short. One of the reasons why I got short was because if we look back at this chart, all of the activity that we saw, we had begun to lose that structure. Okay, so if I am going to be looking for the long in that case, and a lot of the times when you see these lower time frame patterns, something like this, right? Low time frame 5-minute chart, something that either looks like that, or a lot of the times, you know, it doesn't resolve as pretty as that. It'll do something like this, spike that low and then reclaim it. A lot of times at this low, you'll see there's a good amount of trapped sellers down there. So you'll get a ton of aggressive selling activity, which we did get towards the tail end of this. Prior to that happening, okay, we had a ton of aggressiveness by buyers leading up to this point, okay, in this structure, and instead price had begun to trade below it. So what I was looking at was essentially it looked like a backside lower time frame retest right here. Okay, so this is sort of the range that we're focused on. This is the range that I'm looking for that lower time frame breakout on. And instead we start gaining acceptance back below that range and more importantly back below this level. So again, kind of a crude method, not a whole lot of science behind it, looking for a very quick mean reversion in that there's a lot of traders that got long up here and we're looking at them to be underwater in the short term and unwind their positions. What we saw actually was right over here. This was one of the reasons why I got into the trade a bit more aggressively, was at this 782 level. You have 7 million, almost 8 million contracts long into that low. And instead of maintaining that at that point, we lost it. So what I was waiting for was for that position to peel. I was waiting for that position, and this is a 15-minute chart that actually happened on the lower time frame. So if we go all the way back here now. No, we're too far now. Okay. So all of that, where are we? Right here. So whenever I saw that, I knew that that would be the point in which if we lost that, I wanted to get on board a short, because I figured that this person would probably puke their position. So we did get that puke, but the market recovered pretty quickly. And what happened was the market continued to move sideways. We had the aggressive selling into the low, assuming that a reversal was in place. And then as I shared on Twitter, you know, once we traded above that level, I was out of the trade and I was on the other side of the trade. And the rationale being the same as as was for the opposite trade, which was the short. At this point, you have a ton of aggressiveness into the low. Okay, they were in better position as price continued to trade lower, meaning there was really no fire to their feet whatsoever. And as soon as price started trading back above those levels, you know, this was new business back here. We saw that throughout this structure. So go back to trading light. Throughout this structure, while CVD was moving down, aggressive selling, we saw open interest increasing. And for those of you that are members of BlockRoots, you guys know that it's not just that we see something like price moving down, sellers getting aggressive. We need to see that price reclaims that level and that someone is off sides. And we also need to see that it is new business, right? That there's an increase in open interest. So once we started trading back above that level, that short was off the table. Because at that point, just think about it from this standpoint. You know, you're one of the many people that got aggressive over here expecting a reversal. You get aggressive, you know, 2 million contracts. Price starts trading back above your level, you're probably going to be thinking, all right, I'm not comfortable in this position anymore. My thesis might be correct, but it's probably entered at a better location. So I'm either going to scratch this position or I'm going to leave it entirely. And I have no intention of shorting at that point. I'm going to try to cover at the earliest opportunity. And as price begins to move away, you see this sort of dynamic take place where the shorts are beginning to cover their positions, and it's actually helping price move in the opposite direction. So a lot of what I'm doing right now, this lower time frame trading, it's mostly based on these pockets, right? These pockets of traders are getting caught off sides, and I'm looking to take advantage of essentially their decision to close their positions, right? And what I need to see is, again, that one, there's been a ton of aggressiveness that's came into the market. So you're going to start to see that as we trade higher, this sort of knee-jerk response to being off sides with a considerable amount of volume is going to happen pretty quickly. So you're going to see that, you know, when a pocket of activity comes into the market, whether it's 3, 4, 5 million contracts, as soon as that level is lost in the opposite direction, that position's probably going to unwind. So there is going to be a lot of chop, and I have been kind of over trading this chop this morning just for the sake of the competition. But it is primarily built around that idea. You get a ton of aggressiveness. One side of the market is really dominant. In this case, we had aggressiveness into this high initially. And up here, it's not like the bid walked this up. So I'm looking at that. We're anticipating that if we lose this level, those aggressive buyers are going to puke. And then once that opportunity was off the table, Okay, the shorts that were still comfortable at that point, they're the next side to be pressured. So it's not something that is too hard to understand if you just imagine yourself in the shoes of someone who has put on a considerable amount of size. And I think that ultimately we're approaching a point where we're going to see, and we've seen more recently in this high, that one side of the market is going to get really trapped. We're probably going to hit, I think, around 13.8, 14, and see some type of really violent response. So when I say that I am uncertain, it's because of that. I am looking to take profit on something like this long position, as you can see, just at 13,747. Okay, so that's not like I'm targeting that 13.8 level. It's not like I'm targeting 14K. The last thing that I want to do in this competition or in this trading account, I'm long spot across the board. I got long ETH again. The last thing I'm looking to do is to be the last person buying and then have something that looks like this, which is exactly what I anticipate occurring. I anticipate that wherever we go to next, okay, if it's 13.9, if it's 14, I think that there'll probably be an overshoot, and this overshoot is going to be totally exhaustive, and the next thing you're going to see is a big bubble of liquidity up here and then a big drop again. And I don't know where this is going to happen, so that's the thing. That's why I say I'm kind of uncertain about this right now, but I am pretty confident that overall we're going to see at some point a $500 red candle, that $1,000 red candle within, I would say, I don't want to say even a time frame. I'll probably set myself up for disappointment. Okay. Oh, pronunciation. All right, good stuff. Okay. Wearing a hat indoors couldn't be me. Yeah, man, I'm wearing a hat indoors. What's up, Cred? I'm wearing a hat because my hair is absolutely atrocious right now. I don't even want to display it, but yes, I haven't cut my hair in a really long time. My wife put my hair up 2 days ago, and yeah, so yeah, I'll do the man bun thing eventually. But 2 days ago, or maybe this was yesterday morning. I'm losing track of time. My wife put my hair up with pins as well, and I went to bed at the end of the night, and I had all these pins still stuck in my hair. Okay, so what do you think about ETH right now? So I wasn't as confident. I wasn't as confident in ETH, I guess, yesterday because I got out of this position. I wasn't as confident in ETH. I got out of ETH at 411, and I got back in ETH now. I think I just got in at 402 or 403. It was looking like it was showing relative weakness to BTC. I want to think that I have a feel for the times when ETH is leading and when ETH is lagging, and that having access to that sort of or being intuitive in that sense and being able to pick up on that can offer one of those leader laggard plays. But I'm at a loss right now, honestly. I'm at a loss right now because I think that, so this is what I'm fairly certain about. I'm fairly certain that whatever direction Bitcoin resolves in is going to punish alts. So I think that if you're in, a more speculative pair, and that's a friendly way of calling an alt shitcoin. That's a euphemism for a shitcoin. But if you're in an alt, I think that unless it is something like I'm confident in DOT, I'm fairly confident in Link, and I am fairly confident in ETH. I think that no matter what, if BTC moves up, if it moves up, or if it moves down, I don't think that it's going to do it calmly, and I think that no matter what, those high beta plays are going to capture more downside. ETH right now, I'm completely uncertain about. I'm honestly uncertain about it. I don't want to trade around my spot. I think that it's in a good area to define a position spot-wise where I'm willing to sort of let it have some breathing room. As far as trades go, I am not interested in trading ETH because I don't know right now whether it is sort of the laggard or the leader. And I think that might be because I've let a little bit of narrative influence my decision-making process. And, that ultimately means I'm not sure if at this point, I don't know a whole lot when it comes to all of the fundamentals with ETH. I know how, I know how it benefits DeFi, but even that I would say I have a really tenuous grasp on. I do think that there is a possibility that ETH 2.0, the thing that everyone is looking forward to as a major catalyst, I think that the fact that we could all agree that, it was something to look forward to might mean that a significant portion of this rally is due to that, and it might already be priced in. It did get kind of overextended from BTC, so you know, take that as you will. I said for the last month and a half now that this 390, and I was saying 390, 392, 395, right? It's all a zone. That was my level to overtake, and I would increase my exposure at that point. You know, I follow that to the book, increase my spot exposure, but from where we go right now, I'm not 100% certain. And it's the same exact feeling with BTC right now. I'm honestly, I haven't been in this position before. The last time that we made, you know, that we approached these levels, it was exhaustive. Okay, this was a blow off top. This was an exhaustive top. And right now it's kind of like we're just moseying our way within. And if I'm applying sort of the same ideas that I apply in the lower time frame to this, well, then I would say, hey, this is acceptance, you know, and don't overthink this. So I think that's one of the more important things to focus on right now is I don't want to overthink this. And I don't want to forget that spot positioning is a trade. So I have across the board, I have a fairly gross amount of spot exposure to both ETH and BTC, predominantly BTC. So I'm not going to overthink this. I'm not going to, you know, fuck up this macro play that is probably, again, this BTC play is probably driven by this larger macro growth catalyst. But once we hit sort of 14K or 13.8, you know, it's anybody's ball game. I really couldn't tell you if it's going to be a candle that's going to move $1,000 down or if it's going to be something that shoots up to 16K. What I do know is that more often than not, when we approach these major inflection points, everybody gets it wrong to some degree. They either get the direction correct, but they get the magnitude incorrect, or they get the direction correct, but they get the, you know, the inverse of that. So I can't remember which one I said first, but my point is I'm not really sure what to expect. And I think that that's just my way of being honest right now, as to say I have no clue what's going on. Long hair is nice. Thanks, Sweet Canary. No, I'm not going to shave my head. So the thing about long hair, it's like I always had a crew cut, we'll say. And after you grow your hair for a really long time, I feel like I've worked at something and I don't want to spoil it. Yeah, so I'm in this long right now for the competition. I'm just going to let this ride. We're up about 20, I would say I'm probably up about 22% right now, which is not bad, but I started with too much BTC. Yeah, I don't know. So do you think this is a good time to buy for a long term, or do you just wait for a lower price? I honestly hate answering questions like that. I want to say that, you know, the most important things to me are higher time frame market structure, because they are, again, important to everybody else. And that might sound silly, but in a technically driven market, it's not like, you know, I've mentioned this explanation before. I've mentioned this before, where if we have, you know, if we have Apple that drops, let's say Apple drops 20%, you're going to get value investors that step in. You're going to get mean reversion traders that step in. You're going to get CTAs that step in. They're going to all step in at different increments down that path. Value investors obviously going to gobble any opportunity they get, you know, at that moment. But for BTC, for a technically driven asset, when price drops, it's like lower prices beget lower prices. You're less inclined to step in front of something if you think that no one else is going to step in, or the dominant portion of the market is not going to step in until we hit, you know, a major swing high or swing low within market structure, a weekly level, a monthly level. So I always keep these levels in mind because everyone else is keeping them in mind as well. And again, it is a technically driven market. As far as, you know, areas where I would get involved right now, you know, I would say if you're long term, so fundamentals always win out in the long term. I think that if you have belief in Bitcoin in the long term, that you should probably be value averaging in, not necessarily dollar cost averaging, because I want to remind everyone that even though we have this, you know, it's incredibly bullish, right? It's overtaken all levels. Spot has led. You know, it hasn't been very derivative driven, which is fantastic. We're seeing everything that looks like organic price appreciation. That being said, there are going to be big pullbacks. Everyone forgets that, right? Everyone thinks that at some point we're going to just continue on into, continue on parabolically with no end in sight, right? It doesn't make any sense. It's like everyone always forgets that that Bitcoin loves to punish the late participants. And that's where I'm at right now. I think that ultimately we could come down to 12.2, 11.9, and I would say that that's an opportunity. And it's the same concept as the last. Like the last point I was saying with this level was it was messy on the way up. It was messy on the way up. It's probably going to be messy on the way down. I'm not going to treat it like a line in the sand. I'm treating it like an area. Okay, if it wasn't a line in the sand on the way up, it's not a line in the sand on the way down. I'm going to treat this topside structure as well with that same regard. So it's not that I'm going to be saying, okay, this 12.2 level needs to be respected. I'll be looking at more or less this general area. I wouldn't want to lose, you know, if we're going to get specific, I wouldn't want to lose this previous composite value area high, which is right around 11.75. But the last time I said I wouldn't want to lose a level, we lost a level, moved quite lower, established a base, and here we are. So going to have to constantly adapt to whatever price does, right? But this is very bullish. It's very bullish, and it's got a really odd, uncanny resemblance to the last cycle, which I don't like to allow into my decision-making process. But, you know, the history doesn't repeat itself, but it does rhyme. Well, this really looks like it's rhyming hard, right? And I don't want to be the asshole that overthinks this. So I'll tell you this. If Bitcoin breaks the all-time high break in traditional markets, if you're looking at equities, if you're looking at even something like gold, right, which is going to take a longer time to settle, an all-time high break is a pretty high expectancy trade in the long term. And it's not something that I'm going to say, hey, you should just buy at any point. But after you break an all-time high and consolidate, there's a high probability likelihood that it's going to have quite a continuation that follows, whether that means to 30K, whether that means to 40K, 50K, you know, all these ridiculous price targets, which maybe not necessarily ridiculous, but are just kind of, you know, it's futile to start to sit there and guess where the next all-time high is going to be. It's when the next all-time high will occur when the next growth driver dries up. So if this growth driver is sort of the idea of maybe a bond exodus or low interest rates or, you know, no yield to be found, and this being more or less a store of value in this environment, then when that story changes, then this story will change, right? Bitcoin is very much correlated to traditional markets right now, and I don't think that you see those correlations. Once they start, I don't think that you're going to see that they cease. That's the way it is. People ask me all the time, when is Bitcoin going to, when is the macro correlation, when is it going to subside? When is it going to stop being correlated to the S&P? Well, as far as, you know, traditional fund managers and your fast money types, they look at BTC now as a play, a higher beta play on equities, a higher beta play on the S&P. And, you know, that's how they're going to be playing their book. And you're not going to be in a good position to try to fade that type of flow. So I don't think that those correlations are going to suddenly disappear. Okay, what price level would you get fully spot hedged? I don't know. So that's tough because I got pretty long at 94 to 96. So I'm sitting pretty still. That's a personal question because ultimately my pain point is really low. My pain point is all the way back here from this flip. So I could see this coming back down to, let's say, you know, for example, I talk about this level being of ultimate importance to me, and then we come back down to this level, and now I'm equivocating, and I'm thinking, well, you know, maybe I should let it do its thing for a little while and not overthink it. So I don't really have a line in the sand that is actually up here. My line in the sand would be back here, just to preserve USD. And honestly, I think that if after all of this, so I don't think this would occur in isolation. I think that if Bitcoin came all the way back down here and it was hanging out below this level, I think that things on the macro front probably look a whole lot different too. And I honestly wouldn't want to be in Bitcoin if we lost this low. So let's just say, for argument's sake, you're looking below 9K. But that's for me, right? There are people that are getting long right now, and their pain point is $100 below us. Okay. My hair look, but bro, I just raised $2 billion showcasing my on-chain analytics proprietary software to run. Yeah. What you have to constantly remind yourself is, and I try to remind myself of this too, is, and this is not exactly in line with what you just said, Craig, but for those of you that are sort of newer to markets maybe and are just getting involved in Bitcoin, everything is going to look really rosy right now. The developments that are coming out, they're going to all be about Bitcoin adoption and what this fund is doing, and, you know, what this larger player in the traditional space is doing with BTC and their newfound opinion on it. JP Morgan more recently as an example. and things are going to look really positive, and we're going to have some major pullback, and there will be people that that get really, really, you know, raked over the coals at some point. It's going to get really negative again, and this is going to happen. You know, it's going to happen throughout every market cycle. I just try to stick with the basics. My key areas within structure. I think we have a macro growth driver, and I pay pretty close attention to what's going on in traditional markets. Let's see, imagine all BTC pairs look like on BTC. Yeah, so that's one thing that, you know, I joked around today with the tweet and I said uncertainty theory. There are things that I am fairly certain of, and that is the fleet equality effect. So, you know, when Bitcoin starts moving, when people anticipate that the all-time high is going to break, they don't want to miss that train. Ultimately, it will probably be their shift that that sort of precedes the final movements before we have a major turn. And you could always thank momentum traders for the turn, because the momentum traders are the last people to enter on. I'm talking about higher time frame momentum chasers. They're the last people to enter on. They're usually the first ones to get hurt. And that sort of approach towards the all-time high, I think even a break over this high, is going to create that exodus in what is even left of some of the more, you know, forgotten pairs in the alt universe, because I think we have over 5,000 now. And that's a fleet equality effect, right? When Bitcoin gets moving, no one wants to miss that boat. Now, the problem is you should have obviously been paying attention to more, I would say, key contextual changes that occurred prior to the all-time high being tapped before entering into BTC. Yeah, I was pretty loud. So I was loud, but I also said that I didn't want to, just for posterity's sake, just for posterity's sake, I didn't want to not buy this. You know, if you preach something and you talk about structure being really important and higher time frame structure not being invalidated on lower time frames, I will trade the higher time frame on the lower time frame. So when we get first touches, I'll stand in front of that. But I don't want to fuck up something like this. So I'm a horrible artist. So I don't want to start selling something like this. It's a higher time frame structure. I know that it takes a longer time to play out. And the last thing I'm going to do in my book of losses is mark this down as something that I, you know, got overly bearish at, and focus on, you know, what occurred in the short term and miss what was taking place in the bigger picture, which I think a lot of people do. They focus on like the more recent backside retest. And I just don't think that, shorts have been having an easy time in this market for the last year. I don't know. Even myself, like every short that I take, I feel like for all the trades I fuck up, they're all shorts. So, because you never get paid. You never get paid in a short. You never feel like the market has moved away from your entry and you could kind of just like, you know, wipe your hands and sit back and relax in your short. It always comes back to your entry. And if someone has at some point held a massive short, like something like this, like for people that say they shorted up here or, you know, going all the way back, it means that to a degree, the way that I see it is it means that they didn't have, I don't know, the proper risk management system in place to begin with, that they were letting the trade come all the way back. Were they compounding all the way down? I don't know. I'd be very impressed, because price has not made it, Bitcoin has not made it easy on shorts. Are we moving up and I just tapped out? We're right there. You know what? Small bites. I want to let this go to my target. Yeah, I'm just going to let it go. Can I cover the S&P as well? So the S&P right now it's more or less your risk-free rate. It's moving on internals, so it's obviously the most of the movement from the S&P is coming from 5 major equities. It's moving on internals. It is your risk-free rate right now because really there's no place to be anywhere but the S&P. The S&P to some degree is a good hedge against inflation, because any of those internals in the S&P, if you just think very simply, can raise their prices over time. If you just think of something like Tobin's Q, the Tobin's Q ratio, which is how you would value a company based on the resale value of goods if you had to replace them, those are going to go up during a time of inflation as well. So the S&P is something that is typically a good hedge against inflation. As far as BTC in the S&P, I've always felt that Bitcoin has been sort of a play on the amount of global liquidity sloshing around. I don't like to actually be in a trade during a live stream like this because I want to really up. I'm just going to close that out at 163 bucks profit, which is not bad. I think now we're up probably 26%. As far as Bitcoin, I always felt like Bitcoin wasn't necessarily as correlated to the S&P as it is now, like we're seeing on a tick-by-tick basis it is. But I always felt like it was correlated to overall levels of global liquidity. And think about it like this: if you're rich, if you have a lot of money, a lot of excess capital, you could afford to buy luxury goods. You could afford to buy, that extra pair of sneakers. You could afford to buy money and spend money and partake in what's it called, conspicuous consumption, right? So I always felt like Bitcoin benefited from that. It benefited from this sort of risk-on environment, and it was correlated to overall levels of global liquidity. Now, someone else will talk about that as well, and they'll probably talk about it in more detail. And I saw he shared this sentiment as well, and it's David Bell, who is someone that we've highlighted on this stream multiple times. If you want to check him out, he's at Macrodesiac. But right now, Bitcoin is definitely correlated more strongly to the S&P. It was correlated on and off to gold, but I think that we're seeing that Bitcoin is like a hybrid. It's like I've said it's like a young kid that really is not sure of its identity yet. It's kind of trying on different masks. Its character hasn't crystallized yet. I think that it sometimes wants to be that risk-on asset. Sometimes it wants to be risk-off, but it'll always be the risk-on asset. So when we're seeing that traditional markets are moving up, I don't think that moving forward we're going to see Bitcoin do anything but benefit. In the last 48 hours, we've seen that there has been this, I don't want to say decoupling because it's a spurious short-term correlation, but we have seen that as the ES has sort of been sitting in a touchy spot, that Bitcoin has been, holding up decently. That being said, I don't think that personally that we're going to see much of a change with the ES or, looking at, I'm looking at E-mini futures, but with the S&P, I don't think that we're going to have a major change in this trend. The course of history for the S&P has been one of people calling the top the entire way up. And it's sort of like what you see in crypto. And I just don't know why. I think it's a weird mentality especially to try to call something that has positive secular drift over a 20, 30, 40 year time horizon. I don't see, I don't know. It's weird. It's like, it's a masochistic thing to do to always try to call the top and short something like this. As far as this and BTC, I think that they're both going to be moving up together in tandem. Okay. Okay, what else do we have? How much is the USD strength or weakness narrative? Well, how much is the USD I'm not like other girls. Yeah, so I think that this is part of it. The dollar weakness is part of it, but I do have to say, just as a caveat, that I don't think the dollar is going anywhere. So anyone who's betting on the dollar, the world's reserve currency, just falling off a cliff, I think that's silly, right? People get into they get pocketed into these extremes. I think that these two can coexist, and I think that they can coexist in that Bitcoin will continue to be this. I'm sure it's a store of value to some. I don't think that it's necessarily a store of value. I don't think we're there yet. I'm sure that people trade this correlation and that, it is probably being reinforced by some more macro funds that are playing this trade. But that being said, if the dollar begins to, let's say the dollar begins to appreciate, I don't think that it means that Bitcoin has to fall off a cliff. And I don't think that the dollar is going to go anywhere in the long term. I think that, like anything else, we're going to see an evolution in that we're going to have more digitalized currencies, and whether it's central bank digital currency is anyone's guess. But I don't think the dollar is going anywhere. I don't think it means that Bitcoin's going to be hurt because the dollar is not falling off of a cliff. The dollar and Bitcoin will always have a relationship because one is a numerator, one is a denominator, though. So it's important to remember that, right? Did that exit wipe the Phemex books? I don't know, man. So that's the problem. So, Phemex is not there with Bybit yet in terms of liquidity. Now they do have the same liquidity in terms of 1% from the spread. But outside of that, it begins to really thin out. That is sort of what is, I would say, hampering my my growth potential right now, why I'm only trading at, it's really good. I've had a return on my, I started off with, 0.28 BTC, and the account's up now. It was up this morning 29%, and that's probably now it's around 22, 23. It takes a few hours to register. But I've had to trade with 30, 40, 50,000 contract positions, and it's all in the name of being a degen, because you're not going to win, or you're not even going to carry your team whatsoever unless you have some type of ridiculous growth. You just have no chance because you're going against teams that have 200, 300, 400 members, and it's the same concept as traders who get on the BitMEX leaderboard. So for anyone who's fascinated by some of the people that are on BitMEX leaderboards and other leaderboards in general, what you'll see is that these traders will have maybe 1,000 strategies. They'll have a more high frequency approach, and they'll throw the entire book of approaches at the leaderboard, or at building a spot on the leaderboard. And it'll be account growth that's built around very small very small starting position sizes. So the bigger the position you have, obviously the more market impact you're going to have. And my slippage has, while on other exchanges it might be a bit more negligible, it has been eating into my ability to return, because I am trading very low time frame rotations, right? If a half-hour rotation on BTC is anywhere from 55 to 65, some of the moves that I'm looking for might be $40 to $50, but if it's costing me $15 to $20 to get in the position, well, then I am getting in with a market order and getting out with a limit order at times, or getting in with a limit order and getting out with a market order at times. So really, I'm only capturing a very small portion of arguably what I might be able to capture on other exchanges, if I did have that book depth. So, this is something that Phemex needs to improve, and I've always been, brutally honest about that. How does one find a balance between taking profits and letting winners run? So the way I try to put it, sorry guys, my eyes are just, the way I try to put it is, you have to weigh everything with a certain Bayesian probability. So I talked about, conditional probability in yesterday's stream. And if I was just to look at support and resistance in a vacuum, and let's say we have a support, I drew this, let's say we had a support, let's say, higher time frame range, weekly chart, we have 2 touches at the high, 2 touches at the low. If I'm going to be weighing the structure and I'm looking at the fact that value is distributed pretty evenly within here, I'll be looking for the same sort of behaviors I normally would in any ranging environment. I'll look for exhaustion or absorption at the high, or I'll look for acceptance and volume through, right? Looking for buyers and sellers for there to be an imbalance, and for the market to accept either new prices higher, new prices lower, or again, either exhaust down here, loss of momentum to the downside, less willingness to sell, or loss of momentum to the upside, less willingness to buy, or the inverse, which would be absorption, right? Someone heavier hand on the opposite side of this. Now, in a vacuum, I might be weighing this pretty evenly, right? I might be saying, well, I'm going to place my take profit at the high, take profit at the low. I'm not going to change my approach until the market changes, right? Until there is an obvious change that at that point's not deniable. We're accepted outside of here, we're accepted outside of here. And at that point, if that was my 3rd, 4th trade off of this range, it's a loss, right? Which is ultimately something that you have to, begin to accept taking, because you're going to be taking a lot of them. Now, in a condition like we have now, where the market is moving rapidly, there seems to be a lot of conviction to the upside, I would say at that point, my belief is that all resistances lose a little bit of their, lose a little bit of their value in terms of the probability that they're going to hold. I am more inclined to think that, hey, support's going to be there, and it's probably going to be walking up. So any idea I might have for support might at that point be front run. I have to consider that. Pullbacks would probably be a little bit more shallow, and resistances would probably be weighed with a little bit less consideration. So I'm probably not going to be taking hard profits at each target, right? What I think, I said this yesterday or the day before, I said this yesterday, I think one of the better things to do is to place a triggered trailing stop. So not at every level. So a triggered trailing stop might come in, I should have just left one on here for experiment's sake. A triggered trailing stop might be good at an area that could leave us with an exhaustive impulse up. So let's say that, we're looking at this 13.9 level. We're not really certain as to what price is going to do. Now we could put a hard stop right here and just be exited from the trade. But what happens is, more often than not, price approaches one of these significant levels and it just blows right through. And, at this point, if this is something you've been doing for a really long time, you just kind of wipe the slate clean and it is what it is. But if you're new to trading and you start seeing this initially, you're thinking, I shouldn't be doing that then. I'm making a mistake. I'm taking profits too soon. And you might ultimately change your approach at that point just for what is, an anecdotal piece of evidence. And in this case, price has blown through this level. So what I do now is if we're approaching this level and I took the trade off, rather than me place a hard take profit here, I'll place a triggered trailing stop. And I'll place a triggered trailing stop at this value or slightly below. And I'll place the trailing value at something like a multiple of 2 times the half-hour ATR, which leaves us with a value of around, I think it's around 120. Let's see. One sec. I think it should be around. So our ATR right now off of an impulse is 70, but the average is around 55 to 60. So I'll probably put a triggered trailing stop at a value of around $100 below it. And what that allows for is if we come into this level, on the off chance that we come into that level and things get slippery to the upside, at least I have my stop that's following it upward. Now, price could move slightly upward and then dump back down. And at that point, the book evaporates and, it's a market order, so it's going to hit. I'm still exited from the trade. If price gets a considerable distance away, though, I'm capturing more upside. And again, I'm sort of playing on the idea that there's a higher probability of continuation in this kind of environment. And I'm not weighing things maybe as equally as I would in more ranging and bracketed conditions. Yeah. So I don't know. I don't like the dark trading view background. And Michael P., one thing that I am pretty strict about is my spot allocation and my trading account. So I don't really try to fuck with my trading account, my spot allocation too much. So I think that there's a degree of comfort in knowing that at this point I have a sort of do not tamper with spot investment in BTC. I think that that's one thing that everyone forgets. It's like if you're on a derivative exchange, you're already long, which is one of my arguments for why people who are just predominantly bears are assholes. And it's because in this market, most of the derivative platforms imply that you actually have to be long before you could be short. So for people that are on MEX, for people that are on Bybit, unless you're on like Bitfinex and you're taking out a normal margin collateral position, you have to actually be long BTC. So there's 2 BTC longs for every 1 short at that point. You have your spot long, you have your exposed long that is from the borrow. And you're deciding to short at that point, knowing that the market is geared long structurally. So I don't worry too much about, I don't know, in a time like this, I got to tell you, I'm very uncertain as to what the market is going to do past this ceiling, but I'm actually really comfortable because I'm exposed, right? I'm exposed with spot BTC. If the market gets slippery, I'm exposed. If we have a pullback, that's fine, right? I'm still a considerable distance away from my, my cost basis right now is looking pretty good. Dollars just transfer value, but exactly we deal in ratios, right? Still worth continue to dump 10% of my income in the link as well. I don't know, Xenocide. I hate to give advice like that because I'm really, I can be really fickle sometimes. I could say something one week where I'm really confident. I was really confident in MTA. I was really confident in what is another one that I was confident in at the time? It was DOT. And then I totally changed my tune because market structure changed, and I don't start to maintain my own narrative when the structure changes because everyone else is going to be acting on that structure, and you sort of get the the euthanasia roller coaster, as Suzu had put on his Twitter, where at that point when you lose major market structure in a pair, it just bounces all the way down because everyone's looking to relieve a little bit of pressure from their incorrect long position. When it comes to something like Link, I'm confident in Link, but there always is, in any cycle, a flavor of the month. So what I'm worried about now is Link the flavor of the past few months, and is it going to become something like a Raven coin, where it's strong the entire time, and again, it goes on to poorly perform after it has this major top. And I can't really tell where Link is. I publicly got into spot Link from under 10 down to 815. And, you know, I say that because I'm still exposed to SpotLink, but I don't know, I'm looking at 15. I don't know how much more Link goes up from here, just being honest. I think that Link is, you know, I think that it's a strong asset, but I've seen this tape play before with really strong pairs that right now are just kind of collecting dust on CoinMarketCap. And I don't personally, it's not my area of competence when it comes to fundamentals. I just don't have the energy to devote to looking into individual things like this, and I couldn't really tell you if Link is an awesome long-term investment. Yeah, just leave a limit order and trade for 15 minutes per day. Yeah, I hate when people say things like that because I've traded this morning. So let's see. My trading this morning has been pretty hectic, and it hasn't been really that good. So I am up for the day, but on today's book, let's see. So on the Phemex account for the competition, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 10 trades today, and 1, 2, 3, I'm 30%. So 30% of them are winners. That was like tooth and nail, honestly. And I probably overtraded this morning. I'm up, feels good, but I've spent all morning doing this. And honestly, my best days are the higher time frame swings where you get it right. And that still takes, right? The market has to come to my level. It's not 15 minutes every day. It's a good amount of work that's preceded that point. But the concept of trading for 15 minutes a day, it's bullshit. Honestly, it's bullshit. If you're trading 15 minutes a day, you might be paying attention to your position trades that you've already put on. They're more like investments anyway. They want their collateral to depreciate alongside their spot. Yeah, so another problem with, actually, the thing about perpetual swaps is you actually benefit from that convexity to the downside. So if you are shorting, I mean, you're losing. Yeah, you're losing double. So, but, you know, shorts actually have it a little bit easier than longs being offsides because of convexity. Because, I wrote an article on it for Phemex talking about how the contract value changes as you increase in price and decrease in price. And that's what makes, for those of you that are new to crypto, you know, the uniqueness, one of the more unique selling points of a product like the perpetual swap is that, you know, you're margined in the underlying, which is cool because you're exposed already. But because of that, when you're long and the value of your underlying goes down and the value of your trade goes down, right, your per contract amount goes down as well. So you suffer from negative convexity at that point. It's a negatively convex trade to be long in BTC terms on a perpetual swap. Okay. So if you want to think about convexity, think about the ability to slow down before your car hits a brick wall. So positively convex things are things that are able to slow down as they depreciate. So a negatively convex trade is like you're speeding up towards the brick wall. All right, not to get off on a tangent. What are your thoughts on BTC in a deflation type environment? Okay, what will help you decide when to take profit on your spot BTC in case we break all-time highs and enter? I am pretty headstrong when it comes to spot BTC. I have a lot of spot BTC, and I just figure that since I have a good cost basis right now, I'm not going to overthink it. I've hedged it on the way up, which means that I've just peeled some off. At this point, when I'm taking a short position, I'm not increasing my my upside whatsoever. I'm actually just protecting against downside. So anytime I take a short position right now, it's sort of like a hedge. Although it's not properly delta hedged, it sort of is like a hedge. I have taken off of, so for those of you last week that have followed along, you know, I closed out some BTC. I added to Link. I picked up a good amount of Link. I picked up Link. I picked up ETH when I hedged BTC. I got out of ETH yesterday. I got back in ETH this morning. I'm not going to worry about taking profit on my spot Bitcoin for a while. That's just my approach, though. So some people might say they're going to take profit on their spot BTC as we approach the all-time high. my opinion is that we kind of, if we're approaching the all-time high in the same way they're approaching it now, right, at this same pace, I think we're going to nuke it. I think that we're going to have a really big red candle. But I think that if we break the all-time high, price is going to recover, and there's going to be a lot of eyes on the market at this point. And I think that it'll be a really ugly day. It'll probably be a day when you're going to not want to be at your computer. But I think that if it breaks the all-time high, it's a one-way trip upwards still. And yeah. So that's how I feel. I could be penalized by that, but I'm not going to be taking profit. Until next week when I say that things have changed. Some exchanges don't use BTC as collateral nor for swaps. Are they using USDT? So yeah, you could see some of the exchanges are using USDT. And so one of the important features when looking at an exchange that has USDT is that you're seeing that a little bit you're seeing a little bit of them. You're seeing that there's a little bit of a difference in terms of liquidity. So Bybit USDT liquidity is less than the actual BTC perp. Not a whole lot of importance behind that, but it is important when you consider funding, because a less liquid market is going to be harder to keep in line. So you might get some false feedback with funding. Some exchanges, yeah, I don't. Other than that, it's, you're going to see more exchanges integrate the USDT as collateral, and it's at that point it's a linear futures contract, which is more like a normal futures contract anyway. But just wanted to touch on that important point. If you look at, I was just saying this because it's relevant to what I was looking at the last few days. We saw that Bybit, so this is relatively neutral funding, right? So we saw that Bybit USDT margin perpetuals was slightly negative. And if I'm looking at higher time frame positioning, one of the things that I look at is basis, not necessarily funding, but basis, which is funding is a derivative of basis. But I saw Bybit that was still negative, and I was wondering, why is Bybit USDT margin perpetuals negative? And then thought about it, and it's the fact that they're a little bit less liquid, so it's hard to keep that market in line. So keep that in mind if you're playing the whole funding trade. One, you should see that it's shared across the board, and two, if you see the funding is negative on one exchange, look into the overall levels of liquidity. Northman. Oh, Northman, like the guy, what's his name? God, he might have blocked me. I'm new to your channel, love it so far. My question aside from BTC, do you have a personal bag of BTC? Yeah, I do, of course. I have a lot of, I'm a firm believer in Bitcoin. Okay, so let's get this out of the way too. Aside from trading Bitcoin, do you hold a personal bag? Okay, so yes, I have a spot allocation to Bitcoin. I keep it all cold. So that's one thing. Not your keys, not your coins. That's a popular phrase as of late. But my spot bag of Bitcoin, like, I'm not holding it thinking that it's going to change the world, right? Or change. I think I've done well. I don't think that I'm not I'm not greedy, but I'm not holding my spot Bitcoin thinking that it's going to $1 million. I'm holding my spot Bitcoin thinking that over a 10-year time horizon, it's going to beat the level of inflation, and it's going to beat the S&P. From a risk-adjusted return standpoint, it makes a difference from opportunity cost standpoint. It makes a difference if Bitcoin takes 10 years to double or if it takes 6 months to double. If Bitcoin moves up over the next 5 years and it doubles, it's not that attractive of an investment. Now, that is beating inflation. That is beating traditional investments that you'll find in legacy markets, but it suddenly is not the unicorn that everyone is still talking about, acting as if it is so early still to be in Bitcoin. So I have an allocation the same way that I have an allocation to Facebook, to Amazon, to Tesla, right? I've been long Tesla on and off now, going back to the $300 days. I have it on that basis that it is almost a form of technology, but I'm not holding it thinking that it's going to do anything incredible. I would like if it doubled. So yeah, of course I hold a long-term bag of it, but I think that it's going to offer stable growth. I think that it's probably going to poke the all-time high and surprise a lot of people, but I'm not hanging my hat on the idea that it's going to go to $1 million by any means. But but I do think it is a good long-term investment, so I do have a considerable amount of it. And for those of you that follow along, you know that I speak in ellipses. So when you asked about long-term BTC, yes, I hold a personal bag, but I do have to sort of touch on the point because when everyone gets excited, there are people that share the posts like, oh, you're early. No, you're not. And I described this to someone who actually deleted their tweet this morning because I guess they realized they're wrong. I think Bitcoin has logarithmic growth. So logarithmic growth means that it implies that most of the growth has already occurred in the beginning. All right, so most of the growth has already occurred in the beginning. And while it is going to appreciate over time, I don't think that, it's, again, if anyone thinks that right now, the way that people are tweeting, it's like it has, its days of exponential growth are just beginning. That is kind of in the rear view already. Why haven't we seen the famous 30-40% wick dump that happened on the way up 2017? Yeah, well, a lot of this entire cycle has been spot driven. So maybe it's thanks to actually the BitMEX exodus, right? But I don't know, honestly. Why haven't we seen it? I don't know. I'm not sure. But we haven't had a blow off top yet, which is more reason why I'm confident that we haven't had a top, because in something like this, in a reflexive asset, you're going to have a blow off top. You're going to have a blow off top. And we haven't had a blow off top yet. And I do think that this is just one larger cycle. So does anyone have any alts that they want to chart? This is just a last minute stream. I wanted to get some of the Phemex.trade on there. I did close it out a little too early, but what are we at now? Let's see, where are we? So now I am, see, this thing doesn't catch up. You see, I've been talking to developers about this. It says I'm at 11.89 growth. My account value now is, so I started with 0.28, what are we, 587, and my account value now is 0.35. So I should be up at, 19% at this point. So, but yeah, so for those of you that are following on YouTube, in BlockRoots, one of the things we do is like to live trade during the streams. We took a $10,000 account, we doubled it. There's a lot of people that they don't, I don't know, I don't think they trade. So anyone have any questions as far as alts go? My eyes are dry as shit right now. Tomorrow is going to be the coffee and crypto, regardless of the fact that we did this sort of last minute. Oh, thanks, D. Ross. Okay, so what I want to do is I want to give away the $100 in BTC. So the last times I've tried to think of something that was more, that pertained more to markets, and I couldn't think of something, so I asked about the background in the image that I had. But this one is going to pertain to spreads. So this is something I asked on Twitter the other day. The first person that could give me the answer will win the $100 in Bitcoin. And, we try to give away $100 in Bitcoin every video. Honestly, it's coming back, right? Because at this point, YouTube makes a little bit of money, and it's a small amount of money, really, to give back to you guys who have been following us for so long. So one of the questions I asked was, at what point okay, so when would it be that a spread changed even while the spread stayed the same? Okay, what would make a spread, so let's say we have a 50-cent spread, what would make that spread change even if that spread stayed the same? So the first person that can tell me why the spread would change even though the spread stayed the same will win $100 in BTC. Now the spread is 50 cents. It actually doesn't matter what the spread is. The spread is 25 cents, the spread is 50 cents. When does the spread actually change in real terms? Sure, we could look at link. So the first person to answer correctly will get $100 in BTC. For those of you that are wondering how I have time to do this during the day right now, my wife, my sister, and their best friend, and my mother went out for tea. They went out for tea. Isn't that cute? Tea. Okay. Okay. Okay, so the first person got it. So underlying asset decreases in price. Now, technically, it could be the underlying asset decreases or increases in price. Because if the underlying asset decreases in price, the spread actually in percentage terms increases. If the underlying asset increases in price, then the spread. If the underlying asset increases, then the spread decreases. Okay, so that's sufficient. There's not a whole lot behind these crypto chords, so I'm going to reward you with the $100 in BTC. Go ahead and send me your BTC address, and I will gladly send you that $100. Which is all the more reason right now to be giving away $100 in BTC, and to not give away a specific amount of Bitcoin, because if the price keeps going up, I don't know, guys, we're going to have to make this less frequent. I'm just kidding. All right, so let's look at crypto cord. Send me your Bitcoin address, and yeah, D-Ross won twice in a row. So D-Ross made $200, I think, in 2 days. So we'll look at Link. Nothing really has changed with Link for me, other than I'm just not 100% sure as to where Link is in its sort of macro cycle, mega cycle, whatever you want to call it. If you pay attention to Dow theory, I'm sure there's a more specific name. As far as Link, once we crossed this threshold, I became very bullish, right? I talked about picking up spot down here. I took a swing trade off of this level. I got stopped out of that trade. I got stopped out based on exchange-specific reasons, lack of liquidity over here. I would have ultimately been stopped out over here either way. But with where we sit with Link, I talked about this resistance being sort of weighed, I guess, with a little bit less importance because of the correlation we see between Link, ETH, and BTC. And the correlation right now, it's probably around 0.72. So it is a higher beta play on Bitcoin. And for that reason, I think that this is probably a trade manage point. So this resistance that we're at right now. So what that means is I'd consider adding to this, right? If we continue to see prices move up with Bitcoin and ETH, I think that Link is... it's established itself as something that's not going to get smoked by those two, meaning it's going to have a negative inverse correlation to them. I just had the sniffles. So I think that although we're sort of finding a little bit of friction at this 12A1 level, I think they're probably going to come up to 15. I'll reevaluate from there. Right? I'll reevaluate from there, but I'm just not 100% certain of where Link is in terms of its macro cycle. I don't know enough about Link, and maybe that's a little bit of ignorance that I need to. It's not necessarily ignorance, I don't think. I think it's I think it's the belief that I'm not necessarily a Bitcoin maxi, but I think that that a lot of these are maybe better off thought as VC investments. So I don't really approach them with the same trading mindset, because when you start to mix up your, for example, your spot approach, your trading approach, and then your punting approach, I think you get a lot of cross-contamination. And I think that what you could see is there might be a little bit of creep in terms of, you are starting to trade your spot allocation more. You are starting to be a little bit more liberal with your trading balance. So when it comes to altcoins, I've always tried to have this very VC approach, where it's like a VC will make 20 investments and hope that one of them is like 100 times return, right? It's asymmetric compared to the rest. When it comes to Link, I haven't done my research, right? And I think that it's kind of extended now. And I, for one, just being honest, I was talking about Link coming back down to 5. So a little bit of a gut check, and Link could very well do something like this and continue further down. And it wouldn't be surprising at all. And I think that the fact that it wouldn't be surprising at all just sets me up to maybe to get ready for that to occur. And at that point, if we do hit that 15 level, I'll be peeling off Link. So I won't be peeling off Bitcoin, right? I'm confident in Bitcoin, but I'll be peeling off Link. And we'll reevaluate moving forward from there. So... okay, so Crypto Core, just send me your Bitcoin address, and I think we're like an hour into this, guys. I appreciate all of you for coming on to this last minute stream. I didn't really have a plan for it, so hopefully it went well. I wanted to trade during this, but right now we're at an extended point where, okay, so maybe it's just good to go over one more thing before we tie it up. What would I do right now, right? Always a good question. What would I do right now? So in a structure like this, I don't try to overthink continuation plays. So once I realized that I was wrong over here, so once, I shared this on Twitter, my level that I was paying attention to, once I realized I was wrong and we got above this level and had the retest, I was long, right? And we could see that, all this stuff that I'm saying is, I've been long, and you could see all the trades, right? Go through this history. Where are we? Let's just see what exact price that was that we got long. I want to say that was probably around, was that around, no, that was a short. Was that around 602? Let's see. Or was that 5? I feel like it was, no, 602. I don't remember where it was. No, it was 5. It was that 517 or 5. Where the fuck was that? 541. No, that was short. 557. 517. Okay, so I'm looking for the green for the market buy. So 517 was one of the trades, and that was right. I guess that was a break of, no, it had to be lower. Oh, because this level down here is in the 4s. 1 second. 473. Nope, that's the last sell. 452. So this is where I was flip-flopping. Obviously, I said it got chopped up. But with these lower time frame structures, I don't try to overthink them. I don't really have one up here. It's not like it's really painting something to me that looks attractive enough to really define some type of skirty momentum play up to this level. So it's kind of in dead space. And in dead space, I don't want to get involved. So if we get some type of meaningful pullback, back down to this level, I guess I'll monitor at that point. I wouldn't want to see that after a structure like this, so after a breakup, that we have something like this, because then I'm just looking at something that maybe sets up for a range over time. But where we currently sit with Bitcoin, I'm not trying to jump in any positions, right? And that should be obvious. I just closed out that long position. That being said, I'm also now at the point where I don't really want to just try to step in the way with a short. I think that that could be really painful because you could get one of these exhaustive moves up. And if I'm sort of implying the thesis for one trade being invalid, in my opinion, it should make sense that the opposite of what I said earlier, my idea of putting on a trailing stop, why that'd be good. Now the idea of why a short might be bad, it should be a little bit more obvious. Because if I'm saying that I don't want to short up here, things might get a little slippery, right? Same idea as to why I said a trailing stop might be a good idea, a triggered trailing stop. Even though this is a level, maybe this 14 or, maybe one ATR above 14.3, 14.4, and I'm talking about a full day's ATR. Even though you could see a wick into that, I don't know where to define my risk there. Because I've been in crypto now for going on almost 4 years, and I've just seen it so many times where it always looks like it's a second away from having the big dump, and it just moves up another $2,000. So until we're around a better area to define the risk, it's a no play zone right now. Okay, guys. Yeah, happy to be in spot right now, but not looking to take any trades from where we currently sit. Everyone have a fantastic evening, though. Tomorrow's Crypto and Coffee is obviously planned, so we'll have more of a direction for that stream. Have a few things that we'll be talking about, a few bullet points to touch on, and I'm sure we'll be talking about how this day finished off because it's been a really exciting day so far. But everyone have a fantastic evening. Thank you for hopping in, and until next time, what do I normally say? Exercise proper risk management and trade effectively.